Well, hello again, Solis family. Greg Solis here with the update. First of all, on the family front, we had a great trip. We went down to Cabo San Lucas for the holidays. First time ever we've left town for the holidays. We had a great time. It was just the five of us, and actually Jack's girlfriend flew up after Christmas, so we were there from Christmas Eve all the way through New Year's. So we had a great time just spending time together and celebrating Christmas and New Year's, and so just a fantastic time. Kids are all doing well. Emily still is just so ecstatic about going to TCU. We went to the championship game. Unfortunately, it wasn't the best game in the world, but darn it all, that energy was fantastic. And being a UCLA Bruin, I've never been able to go to a championship game, so it was still a real privilege. I kept telling Emily that. Who cares about the results? They made it. It was fantastic. Jack's doing well, playing a lot of golf. Nicole's back in Hawaii, doing very well in school, so very proud of her. And Monica and I are just having a good old time. So on the family front, everything is good. We're geared up for 2023. Again, Happy New Year to you and your family, and look forward to getting together with you soon. Market-wise, okay, been really volatile. We look back at October, we kind of hit a low on the markets. 2022 ended up being just a very challenging year overall. The NASDAQ was off around 33% thereabouts. The S&P 500 ended the year down about 18%. Bonds measured by the high quality corporate bond market down about 15%. So it was just a challenging year. Stocks were down, bonds were down, very, very difficult year. As we entered into 2023, things looked a little bit better, but it's been real volatile. And here's what's going on. As we know, the Fed raised rates dramatically. As a matter of fact, the short-term treasuries now are up over 4.4%, right around 4.5%. We haven't seen that in a long time. Meanwhile, the 10-year treasury is back down to about 3.4, 3.5%. Well, what's going on there? Well, the Fed had raised rates so much that now it looks as though, the market is starting to price in that recession, which we've been talking about for a while. So an inverted yield curve is not normal. Typically, the longer the maturity, the higher the yield. That's a normal yield curve. But right now it's inverted. Short end yields are higher than longer term yields. And again, that's the market telling us that things are slowing down. We had retail sales come out last week. They were down quite a bit. We're seeing employment numbers starting to come down a little bit. So what the Fed is doing is working. They're trying to slow things down. And for a while, when there was bad news coming out on the economy, the market was rallying. In other words, it was like bad news was good news and good news was bad news. Well, now finally, bad news is bad news. In other words, the economy's slowing down and now the market is getting more volatile in pricing in that recession. The big question is how deep and how long is this recession going to be? We still fall in the camp that this recession could potentially be kind of mild. In other words, not a hard landing on the economy, maybe a soft landing in the economy, and it maybe won't be real long. If that's the case, then the market, we feel, is pretty well valued, and we should begin to see the equity markets do better. Bond market should stabilize, but it's going to be a volatile time as we kind of have to wait and see what the Fed's going to do. But we're definitely getting close to the end of tightening. We're expecting maybe a 0.25% increase in yields when the Fed will raise the Fed funds rate, maybe a 0.25% in February. And then we're going to have to wait and see what's going on. They might have to do it a couple more times, but we're seeing them slowing that down and tapering that for sure. And so hang on tight. We still think the corporate balance sheets are really strong. Personal balance sheets are still strong. Employment numbers are still pretty strong. And that's why we think that creates a base case for potentially having a mild recession. But hang on tight. There will be some volatility. Overall, the accounts are doing well. We're positioned nicely. We've been doing our rebalancing behind the scenes and getting everything aligned properly. But if you have questions or you need us, again, please never hesitate to give us a call. Again, my very best to you in 2023. I pray the very best for you and your family. Take care. God bless.